Hey everyone, I'm Charlie Shrem, and I'm here today with CZ, the founder and CEO of Binance.com. Binance, CZ, thank you so much. We're not even on my show. We're on a big Binance event talking today.
Yes, I think so. I'm not sure if it's a Binance event, actually, but I was asked to talk here, so here I am.
I know they tell us to get in, and we're here on the camera, and we're talking. But This is such a great topic because we're talking about bridging the gap between centralized finance and digital finance, decentralized finance, bridging the gap between centralized and decentralized finance. I feel like up until now, this was never really a topic of conversation because everyone really looked at crypto as custodial and non-custodial, right? So you'd have like not your keys, not your coin. Remember those days? Like don't keep your crypto on exchanges. When you and I actually talked on the show a few months ago, we talked about that specifically of, what's going to be the future of this centralized and decentralized finance world. And it kind of got to a point now where it's coming to heads, where you have the pros of decentralized finance, but also the cons of it. And you have more of the pros of centralized, so I don't like to call it centralized finance, more like centralized, decentralized finance. How do you see the whole landscape at this moment as we're talking today?
Yeah, I think I think you understand it really well, and the way you describe it is centralized, decentralized finance.
That's the best way. DCD.
Yeah.
DCF.
So I think there are a number of different approaches. Some people like to make one giant leap forward and thinking you gotta go full decentralized. You gotta hold your own keys, and then that's the only way to go. But if we want mass adoption, 99.9% of the people today do not know how to hold their private keys properly, securely. So I think just 3 or 4 days ago, there's one guy on GitHub. He said he lost 1,400 BTC, right? So that's $1.5 million. So we see that all the time, actually. So what we want to provide is basically, we have both. We have a decentralized service. We have a centralized service. But our centralized services decentralized economy, right? So we list DeFi coins, we list other blockchain tokens, etc. So I think there's a gradient scale of I foresee incremental steps to get to the ultimate goal of a higher degree of freedom of money. So I think these two have to coexist for quite a while. I think I think for individuals, if you want to go fully decentralized, holding only decentralized assets, never use a centralized exchange, that's perfectly fine. But for most of the population, they will most likely be more comfortable using a combination of centralized and decentralized services. So I think that's the current state.
It's a trade-off. In some aspects, there's a lot more risk when it comes to fully decentralized finance. There, in some aspects, a lot more rewards, at least in the short term, with the rises and the falls. But decentralized, centralized finance, the ability to just go to a place like Binance or Nexo or whatever, stake your tokens or your coins and earn interest, above 8%. Without much risk because they're using a custodian like Bitco or whatever, that I still consider on the spectrum of decentralized finance, even though it's being supported by centralized companies like yourself, because you need those companies in the interim. A lot of people are looking at this okay, finance is amazing. The banking system works in the world, but from where you're coming from and your perspective and where you work day to day, the financial systems don't work, per se. And so that's who you're really going for.
Yeah, absolutely. I think, there's different type of risks in both places. So with centralized services, if you have counterparty risk, the exchange can run away, and that is a risk, and then the exchange can be hacked. In the decentralized world, smart contracts are not bulletproof, right? We had DAO got hacked.
You can
on
say
Ethereum.
That again.
Yeah. So this is why we have ETH and ETC. There was a rollback and a fork, etc. So there's just different type of risks. But we give choices to users, and I think anyone can choose for themselves. But saying that just because I use one version or the other, that means everybody else should use that. I think that's a wrong take. We should just give people choice, and over time, people will just choose one. And today, the majority of people are still more comfortable knowing the exchanges there, having a customer support to call up if they forget their password, etc. So I think it's going to take a few. In my view, is it will take a few incremental steps to get to a more decentralized financial world, where even I think in that world, the centralized services will still continue to coexist for some time to come, I think.
During the 2017 crazy ICO bubble, you had thousands and thousands, tens of thousands of projects and coins and tokens that just ended up being, for whatever reason, they're not with us anymore. And a lot of people are comparing that fairly or unfairly with what's going on today, even though it's like such a small amount compared to what that was. But, you and I talked then, and I remember one of the things you told me was, out of all these projects, out of all these coins and tokens, if you can get just one or two good ones, it would be the success of this whole industry. And we saw nowadays when companies do token sales, they do it in a much smarter, safer, transparent way. You see publicly traded companies like INX launching, the ability to have a security token. So that's what we got out of that. And that's amazing. Yeah. What will we get out of the DeFi? Not the I'm not talking about staking USDC and earning 10%. I'm talking about like the yield farming, swerve, curve, 30% overnight. What will we gain from that?
Well, I think, to be honest, I think that comparison is not unfair. So I think it is fair to some extent. I think for any new industry, any new sector, there's bound to be a very high number of failures. So if we look at 2017, the ICO days, looking back, there are a large number of projects that's no longer there. There's a large number of failures. But there's also like projects that came through that and become very successful. Binance being one of them. We came through the 2017 ICO stage. So I think for DeFi, it's going to be a fairly similar situation. I think there's some fundamental concepts like, staking your coins and those coins are used by a automated market maker with a known algorithm for market making to provide liquidity for other people to trade against, and that provides better prices for other people, and then the trading commissions are shared with you. I think that concept works. I think that will stay. I think that's similar to the sort of blockchain fundraising. That fundamental core concept works. What might not work or may not stay too long is all the high incentives built on top of it. Okay, if this one gives you 8% yield, let me give you 16% because I'm going to issue a token, and then we're gonna use that token as an additional incentive. And now it's like 1,000% annual yield. I think those things will not last that long. Sooner or later, it's gonna come back to the ground. So I think if people who are investing just for those super high return reasons, there are some really high risk tokens. But I think DeFi fundamentally, the core concept probably will stay, and it's also actually impacting. It's actually teaching centralized exchanges where now there's a new way to stake, and there's a value proposition on both sides. Now you can tell people, look, stake your coins, and then that will be used by an automated market maker to boost liquidity. I think that all makes sense. And in fact, we just copied that on the centralized exchange, and we launched it over the weekend, this past weekend. So, and that's working. That seems to be working now.
I did get that message. And what are you guys working on now with yield farming? I saw an email about that last week.
So we actually have a couple of different service offerings. So one is what we call Binance Liquidity Swap, which is a centralized service where you deposit your coins into Binance Savings, and those coins will be used by an automated market maker on the centralized exchange in a very similar way to how decentralized exchanges work. So they will go those coins will be used to provide liquidity. So this way, the order book should be quite deep. And then when other people want to trade against it, they'll get really good prices. And then the trading fees or any spread that are made by those market makers are given back to the guys as rewards, as staking rewards. So that we have copied onto the CeFi. We also launched what we call the Binance Launch Pool, basically, if you stake before, there was Binance Launchpad where you have to stake or lock some BNB to get a chance to buy into Launchpad IEO tokens. But now you just stake your BNB, and the IEO tokens are actually airdropped to you.
Oh, that's so cool.
So now you don't have. It's not just a chance. It's like if you view one BNB equals one BNB, and one of the airdrop tokens equals one airdrop token, there's no risk. There's close to zero risk. The BNB your BNB is not taken away, just locked there, and you just get this additional token. If you compare to USD prices, then each token's price may vary over time. But it's a very simple thing where before you have to actually lock BNB and then use additional money to buy the tokens, but now just stake it, and that's yield. There's a third thing which we are also doing together with the community is we launched the Binance Smart Chain, which is a blockchain that supports Ethereum compatible smart contracts. So if you have a smart contract on Ethereum, you can just copy that over and you can launch it. So we're hoping that more of the community will be able to launch more DeFi smart contracts.
I need to launch a smart contract. I've been talking about launching my macro coin for like 33 years, but I never got around to it.
Control V.
No, I know, but that would be I have a whole like social experiment idea, but that's for when I'm not busy with other stuff. This not maybe a stupid question, but a question that can only be answered by someone by people in certain positions. But do you think this wave of DeFi is pushing forward a bull market that we're in, or is it because we're in, like, we went through this 2-year bear market and now we're in a bull market that DeFi is big? Like, which one is causing each other, or are they more going hand in hand?
I think they're causing they're kind of going hand in hand a little bit. But I think DeFi definitely was one of the triggers for this bull run. I mean, basically, some of the things are really hard to predict, right? Like even 6 months ago, if you tell me that stablecoin trading is going to be the next it may be one of the next triggers for the next bull run, I would be like, I couldn't imagine that, right? Stablecoin.
No, I couldn't imagine that either. They were like, I was like, what? I have companies that have stable coins that are stable coins that hire me and say, Charlie, like, our stable coin is not trading. And I say, it's on a great exchanges. And I say, well, because it's not volatile and because it's stable coin. So no, who's the trade stable coin? So we go and we change the whole model around and everything like that. It's very interesting how that works out. I love I love doing that for some of these projects and coins and tokens, like changing their model and doing some cool token economics to them. It's fun.
Oh yeah. But yeah. So and this time around, I think really the stablecoin trading really may have triggered the bull run. But then once the temperature is triggered, then everyone pulls in, and Bitcoin increases, BNB increases, all these other token increases. So, but I do think definitely DeFi probably is at least one of the triggers, if not the trigger.
There's a lot of Binance users were asking the same question relating to, they submitted questions on Twitter and Facebook and everything, but they need help avoiding scams. So that's like a first thing. It's like, how do you know what product? Because now with DAOs and decentralized finance, you very much are sending money to a smart contract. Obviously, not everyone can audit it and read and understand them. But what are some basic things that someone could look at to avoid a scam? And on top of that, how do you think eventually this specific part of the industry will be regulated?
The second question is a lot tougher. I think the first one is really fairly basic. Don't follow what other people say. I think everyone needs to spend some time every day to read about it and test things out before buying into a token. A lot of people don't even read the white paper, don't even read the project description. They just say, okay, no, this one's gaining, and some friend told them to buy it. Or it's simply listed on Binance, they just buy it. So those are super high risk strategies. Those are really just bad strategies. So I think for anything that anyone invests in, everyone needs to put in the time to understand what they're buying. So I think that's the really there's no shortcuts around that. I mean, for Binance, we do try to select popular projects and try to weed out the pure scams. And we recently had an incident with Sushi Swap, and to be honest, the founder didn't do anything wrong per se. He told everyone that the founder tokens are unlocked. He has every right to sell it.
From
but when
he
sold it, but when he sold it, everyone panicked. The price dropped, and everyone's blaming us for listing that coin. So it's just so I think basically people need to understand in the new sector. Well, to be honest, in all of crypto, everything's super high risk. So we do try to do our best to select these decent projects, but we're not perfect.
There's nothing you can do about it. You have, Coinbase gets sued because they don't list Bitcoin Cash in the beginning. Remember when Bitcoin forked? And so there's really not, you're in a position where I hate to say it, but you're not going to make everyone happy, and you're big enough to a point where when you build something that's worth taking, dude, people are going to want to take it from you. That's the point of the world we live in, right?
Yeah, absolutely.
You build something worth taking.
Yeah. So absolutely. I think that's it is what it is. We just got to do our best and keep moving forward.
And I've been talking about Sportsbet.io and their clubhouse, which is a huge community. When you play, when you make a bet, when you do a spin, they pay you with free hands, cash back, and bets. You can play all sorts of games, and they've been doing this for so long in a free, fair, and transparent way on the blockchain. Well, that's not why I'm excited today and why I'm talking to you about this. Because now they're taking this community to the next level by sponsoring the Southampton Football Club. You're talking about millions of British football fans can now see the Bitcoin logo on the front and the sleeve of also the Walford Football Club. How amazing is that? You're talking about not sponsoring your company. You're talking about sponsoring Bitcoin and crypto. Millions of people around the world are now going to be seeing this and joining the Sportsbet.io clubhouse to earn more points, to play games, and to be part of that community. There's really no other way that you can use and spend your crypto and then actually earn more back and be part of this whole community. So listen, make sure you guys join sportsbet.io/podcast. Give them the support that they deserve because they're supporting us and me. Go play some games, get some free hands, get some free spins, and make sure you check them out and support them on the Southampton Football Club's first game, whenever that's going to be. Check it out. We've become okay with the fact that our big tech giants are selling our data. Facebook, YouTube, Twitter, Instagram. We use all these apps and they take our data and they sell it and they make money. Why are we okay with that? My sponsor, Permission.io, has decided to figure out a way to take all that Silicon Valley power and put it back in the hands of you and me. You're asking yourself how? Well, check it out, Permission.io/Charlie. They figured out a way that lets you take back control of your data and earn information, earn rewards, and earn content. You now have the ability to basically say, this is all my data. And when advertisers come along or people want to come along and buy that data, you get a piece of the action. So check them out, Permission.io/Charlie. I love talking about projects that are cool. I love talking about different companies that are so cool and that support me because I want to support them. Permission.io/Charlie. In that sense, like doing your best and continuing to move forward. This is a question I always wanted to ask you. But is there another company, historically, it doesn't have to be a company that exists today, or an association or a group of people that you look at in history and say they ran their business the way I want to run mine? Because I'm always wondering what in your mind these common denominators that make you steadfast. When you're running a very large organization, it's very easy to become unorganic. The company can go all these different ways, and all the people can mold and form and change the aesthetic or the feeling or the vibe of the company, and that could change everything. That can make a company fail, right? Are there any? I've always wanted to ask you this. Are there any companies like in history or people that you kind of look at and say, what would that person do, or how did they run their shit?
I think the answer there is there are a lot of great companies, but I think most of those companies are not in a stage where they. Most companies they have a different direction. They have a different goal. So if you read a lot of books, that's built to last, good to great. That's how to build a $1 billion, $1 trillion company, etc. But all of those things view a company as an entity. So they view a company as an organization. I think if you look at organizations, you can look at religion or some other things that actually survive over time, but they generally don't have a business model around it. Some of them do maybe, but I think
religion has a business model.
Yes, I do. So I did have to correct myself there. But I think for us, for me, for us right now, we're growing so quickly. So we're really just trying to learn how other startups, how other organizations have gone through our phase with like 1,000, 1,200 to 1,500 people phase to 2,000 people maybe. I think longer term, we have to think about, or at least I want to think about how do we decentralize a centralized entity. So how do we decentralize a centralized exchange? I think we're at a point where we may have a unique opportunity to do this, whereas previously the other organizations may not have this chance. In the sense that for example, when Binance started, we're dealing with only crypto, and we are able to not be centralized in one place. And going forward, we can actually I think this is possible to decentralize the entire organization, even the centralized part.
Well, so that's going to be a
challenge. Yeah.
It's not just that. There's a bit. I'm waiting for the first company to do it. Well, I know there are a few small, like there's one project, Saga, that I work with that they're doing it, but I know a few companies that are trying to do it. But potentially let your whole board be outvoted by token holders. And so when you have, like, if you think about it, like that other project I mentioned, when you have like all the founders and everyone have to like run for election to stay part of the company. How cool is that? Yeah. I don't think you guys should do that now, but down the road, that could be something like launching an advisory board that works closely with your team. That's just advisory, but these advisory board people get elected by other BNB token holders. Have you ever thought about anything like that?
We definitely have thought about it.
It's cool.
I think, yeah. So I think basically we have to be a bit more mature.
Yeah,
for some of the more mature, stable, and large user base type of areas, we can definitely try that. So I think we definitely want to try that in the future. So I think it's going to be some really interesting experimentation there. Whereas again, I think there's pros and cons each way. The more decentralized way of running an organization, the decentralized governance, is more fair and potentially more inclusive. I think for early stage organizations is less efficient because everything you got to organize a vote, etc. And then there's only so many things you can vote. So there are pros and cons in each way. But I think I totally want to make Binance a decentralized organization going for in the long run. So we'll see how that goes. We can also do it piecewise. So the
you could do
stacks, and a number of things they will start as decentralized. But I'm trying to figure out a way how to decentralize the centralized exchange.
I don't know. How would you do that? You are doing it in a forward way. I've been watching, by launching various Binance in different countries and different regions to allow for the people that work there and use those regions to be the ones working. I see that, and that's a great step forward. But it's not just a Binance thing. I don't know how companies in general would further decentralize themselves, because as I see it, there are no legal precedents right now that it would accept a shareholder vote or whatever using tokens. So I don't know how you would really need that first person through the door. And unfortunately, a lot of people are scared because you get the first person to the door gets shot.
I think we have a unique advantage there in the sense that, number one, we don't have a large number of external shareholders. So we have a very low number of, we have a very small percentage of equity that's owned by external. And then the second thing, we have a token. So, so as you said, so the team that wants to do this needs to be incentivized by the token. So for a company that doesn't have a token yet, they want to issue it, and the investors may or may not buy it. And then if they have a large number of institutional investors, they have a board, so they do all of this. Then they're kind of on the traditional rails. They may be going chasing the IPO, etc. So it's harder for them. Whereas for Binance, I think this is a very unique situation where we may have the right ingredients to do this, to try this. So we'll see how it goes.
Yeah, it would be such a cool, fun experiment to see, and I think, like you said, if there was more of a utility or a reason to do it, like if all the shareholders were all over the world, or you needed to have like a company that where the shareholders didn't like know each other potentially. So I mean, you can have all these different things. It would be really cool. Now that I'm thinking about it, but I don't want to get super lost in that rabbit hole. Do you think do you think 2017 in general shaped our economy that we know it today? And if yes, the industry that we know it today, how will it be shaped by, decentralized finance, or decentralized centralized finance, which is what I like to call it now after talking to you, DCF, decentralized centralized finance, DCDF or whatever.
Yeah. So I think 2017 definitely taught the industry a lot in terms of what the blockchain can do, what smart contracts can do. And also maybe we were over hot at one point. So 2018, 2019, during the crypto winter, I think 2017, a lot of people got into the industry. And afterwards, there was a crypto winter. So I think that helps to a large extent in terms of not going overly crazy with this DeFi. I don't know, maybe it hasn't taught us anything.
No.
But I think overall though, 2017 was probably the highest number of people that got into crypto, and I think we're kind of slowly climbing back up to that number now. So I think for DeFi going forward, I think blockchain fundraising is a killer app and will stay. So I think that's also contributed by the 2017 ICO.
That's not changed. That's still happening.
It's still happening. Yes. So we are still doing Launchpad IEOs or other ways to help blockchain projects raise funds. So I think for DeFi going forward, it's hard to say, but I do think the automated market maker concept are adaptable. Is a good fit for many coins that are highly correlated, so they don't really go one way over time. Yeah. So I think that model probably will work to a large extent, and I think people will try to come up with more and more innovative market maker models so that people can stake coins and get a reward. So I think that probably will stay. The rest I really don't know.
How can this technology be applied to like the real world, with like staking and coins at the real world? But I'm trying to understand why the concept of staking, you never thought of a company in the stock market saying, "Hey, stake your stock or your warrants or whatever, and you could earn a specific type of interest," or the ability to tokenize cash flow, things like that. I don't understand. Did we need blockchain technology to make these things happen?
I think, conceptually, we didn't need blockchain technology at all to make this happen. But the traditional world has gone more into the sort of the game's been played for too long. Everybody knows. Well, a lot of people who have a lot of money knows the rules of the game. Basically, multiple series of funding. The VCs want you to IPO, and then you IPO, and then dump on the retail investors. There's a dividend payout, but it's typically tiny, especially for technology companies. So and the CEOs gets a big bonus when they push a stock price to a certain level. They use the company money to buy back. So that's all that game that's being played, and a lot of people know the rules of the game, and they game it, right. So that's happening there, and the government have no choice but to print large quantities of money, new money, and which devalues everybody else's holdings, fiat holdings. So I think with crypto now, to be honest, if you look at all the new token issuances, all the new token rebates, that's the same as printing money. But Bitcoin is
less inflation. It's more fair.
But if you look at a single coin, if you look at Bitcoin or like a BNB or like a single coin, then there are coins with no inflation. So, but the big difference there is that people have a choice not to convert into those new tokens. So there's a fundamental difference there. But so I do think. So I think in theory, everything that we're doing now on decentralized finance could have been done on centralized stocks, equity, etc. But it's just that there's no incentive. The biggest problem there, I actually think, is the central intervention of printing unlimited amount of money, making people all poor over time, and then people, of course, don't want that to happen. So if there was, say, look, there's a limited supply of US dollars and that's it. And I think the same problems can be solved. The problems that crypto is trying to solve can be solved in the traditional finance. I actually think so there are many governments who are like a little bit nervous about blockchain, cryptocurrencies, etc. I actually think the best way to sort of slow down the crypto adoption is to make the traditional finance better, with high degree of freedom, easy to use, low transaction fees. If all of those features can be brought into the traditional finance, and people will have less incentives to adopt blockchain currencies.
Yeah, but we don't want that to happen. We want everyone to use blockchain. I see your point. The point is you created an alternative, better system. People use us, but at the same time, the traditional finance world, they are learning from us. They're learning from our industry. Whether it's very slowly, they still are learning from our industry, and they're bridging that gap between traditional finance and decentralized, centralized finance, which was actually the topic of this show. So to wrap it all up, thank you for taking the time and coming today. And I think the takeaway here is what we've learned, and tell me if I'm wrong, is that the community is okay with the centralized, decentralized version of DeFi that we have right now, but understand your risks, know the scams, and know the differences. Is there anything else that I missed there?
I think that's a pretty clear summary. I don't really have much to add.
And are there Binance communities that people can join in their local languages if they have questions or they need some help hand-holding?
Oh yeah. So Binance now we have probably close to 100 Telegram groups, and they're organized by different languages. The English ones are about 100,000 people ish.
Wow.
Like we have Spanish, Russian, you name it, Turkish, you name it. So we do have a different divided by language. We also provide customer support in about 17 languages now. So if you try to chat with us, chances are we may
be fun.
we probably have somebody. So we probably have somebody who speaks your language, and we're trying to add more. So we're definitely trying to do that, and we are running more local events to try to teach people, meetups, etc. So we're definitely trying to do our part to sort of spread this industry.
Awesome. Well, I'll talk to you soon. Thank you.
All right. Thank you, Charlie.